Hello and welcome to our video on Introduction to Trading. In this video, we'll be exploring the basics of trading and what you need to know to get started. Trading is the act of buying and selling financial instruments like stocks, currencies, commodities, and derivatives in order to make a profit. Trading can be done by individuals, institutions, and corporations with the aim of generating returns. There are several types of trading, including day trading, swing trading, and long-term investing. Day trading involves buying and selling securities within the same day, while swing trading involves holding positions for several days or weeks. Long-term investing involves holding positions for several months or even years. Before you start trading, it's important to understand the risks involved. Trading can be volatile and there is no guarantee of profits. It's important to have a solid understanding of financial markets, technical analysis, and risk management. One of the first steps to trading is opening a brokerage account. A brokerage account is a type of account that allows you to buy and sell securities. There are several types of brokerage accounts, including discount brokers, full-service brokers, and online brokers. Discount brokers offer lower fees but fewer services, while full-service brokers offer a wider range of services but at a higher cost. Online brokers offer a balance between cost and services. Once you've opened a brokerage account, it's important to choose the securities you want to trade. This can include stocks, options, futures, and Forex. Each type of security has its own risks and rewards, so it's important to do your research before investing. One of the most important aspects of trading is risk management. It's important to have a plan in place for managing risk, including setting stop-loss orders and diversifying your portfolio. Stop-loss orders allow you to limit your losses by automatically selling a security if it drops below a certain price. Diversifying your portfolio involves investing in a variety of securities to spread your risk across different assets. Technical analysis is another important aspect of trading. Technical analysis involves using charts and other tools to analyze price movements and identify trends. This can help you make informed decisions about when to buy and sell securities. Finally, it's important to stay up to date with market news and events. This can include economic reports, company earnings announcements, and geopolitical events. By staying informed, you can make more informed trading decisions and reduce your risk of losses. In conclusion, trading can be a profitable venture, but it's important to understand the risks involved and take steps to manage your risk. By opening a brokerage account, choosing the right securities, and practicing good risk management, you can increase your chances of success in the markets. Thank you for watching and we'll see you in the next video.